Simplicity is hard to build, easy to use, and hard to charge for. Complexity is easy to build, hard to use, and easy to charge for. Chris Sacca. Chris is so right. Sometimes when things are simple, standing right there in front of you, you don't realize the value of what you have. And I see folks all over the internet and everywhere else talking about so many complicated things when it comes to the market, and all the news and the analysts and the people telling you this and that and the other. Literally, one segment of the news to the next, they tell you the exact opposite. And for those people who stay tuned into Bloomberg and CNBC and all the other news sources, reading things that mislead you, guide you in the wrong direction, the right direction, you don't know which way is up. Let me tell you what's up and what's down. That is price movement. We separate the signal from the noise by looking at price movement. That's what matters. What these charts are doing is reality, my friends. This is real. Everything else can be fantasy. It can be set up to mislead you, or it can just be the blind leading the blind. So don't be blind. Look at these charts. Pay attention. Now, it's going to take you 10 to 15 minutes every day. Anybody who says 2 or 3 hours, nobody's going to do that over time. 10 to 15 minutes a day. And the sad thing is, most people won't even do that. They'll have an excuse. Well, you know what? I don't have an excuse. I don't have an excuse. Every day I bring you this. I do it every day. If I do it, you can do it. And if you care, you will do it. And people ask me, what do I get from this? Let me tell you what I get from this is I get to sit here and analyze every single day what is going on. If you don't think that helps my bottom line, you're crazy. One reason I do this is because it makes me so much better at what I do, at tracking these markets, because I'm having to tell people what's actually going on. And it is of incredible benefit to me. What can you do to make this the most beneficial to you? It's not just listen. It's to be interactive at the same time. How do you do that? Subscribe to TC2000. We have a link in the show notes that gets you $25 off. Subscribe to that. Get the version of it for a few dollars a month, and then you can download the charts that we use here. And as you listen to the program, when you have the time to actually be at your computer, I know a lot of you listen to it on the way home. You're listening to it maybe on a train, subway, bus, whatever it is. Maybe you've got a little bit of time late in the evening, whatever. Do try your best to always have with you a daily market worksheet. Of course, on Fridays, weekly market worksheet. Every time you do a trade, do the trade worksheet. All those PDFs are in the show notes every day for free. You can buy a 3-month version from us if you want, but print them out for free yourself. Always have one with you. Fill it out every chance you get. Putting pen to paper is the best way for you to understand what's really going on. It makes you think about what you're writing down, what's really happening. Of course, what do we tell you to do every Wednesday? Back away from the markets. Forget about everything going on the 2-day and the 4-hour chart and just look at the weekly. The weekly chart, my friends, as those of you who've been with us, you know that's where the weekly vertical crossovers occur. Every weekly vertical crossover we have had this year that had an entry point. There was one on the S&P where it started to bounce off and then ended up crossing back over through. That's the only time that we've had even a close call of something not working. With all the weekly vertical crossovers on all 4 charts, S&P 500, NASDAQ 100, 20-year bonds, and gold have worked time after time after time after time. That's incredible. Is it complicated? No. Is it simple? Yes. Is it something that you can just, routine, every now and then, once every 2 or 3 weeks, see what's going on, find a jumping-in point, jump in, make a bunch of money? No, you're going to have to spend 10 to 15 minutes a day. But come on, it'll be the most valuable 10 to 15 minutes a day you spend. I mean, what else offers you the ability of unlimited wealth if you learn how to read these charts and utilize what you learn? I mean, think about that. Think about the value of what we do here every day. I tell you, it is the most valuable time you can spend for your financial future. And we've got a great training course we're going to be putting out. In fact, I'm going to be releasing the information about it. We're also putting out for you just the basic free training that we have on options. That's going to be coming out tomorrow. I've had it in the can here for a while, but I was getting everything set for the intensive training before I put out the options training. The intensive training, of course, includes tons of options in addition to tons of technical analysis, or what we call charting, and then how to create and manage your own personal wealth fund. More about that as we move along, but I just want to encourage you every day, 10 to 15 minutes. It will be worth its weight in gold. Okay, folks, let's jump. We're not going to jump into gold first. We always do gold last. Let's jump into the S&P 500 on the weekly chart. What do we see going on? Green spinning top is that what's the week has turned into. Almost a green doji. Means indecision tending up. Really, are things bottoming? Are the central bankers going to be able to hold things at about the 189 mark or so? I'm sorry. Some reason I always say 1 when it's 2 dealing with the S&P 500. The 289 mark. Are we going to see the bankers, central bankers, try to hold the market from crashing any lower than that? Well, they're trying like crazy to do it. We see that the price percent oscillator still heading down, still negative. Derivative oscillator gaining downward momentum. We go to the 2-day chart. It's still negative. The price percent oscillator is heading up, but has not crossed. Derivative oscillator losing downward momentum. That's a green spinning top for the last 2 days. It's pushed through the weekly and the 2-day trend lines. Again, what we see happening really is a sideways slide. Again, are things going to bottom somewhere around that 289 mark? We will see. And we go to the 4-hour chart, and again, we see things bottoming on this chart, somewhere around the 285.50, something along, well, let's see, let's do better than that. Again, yeah, around the 285 on the 4-hour charts where we're seeing it, somewhere like that, and punching up. But I tell you what's interesting, friends, when you look at this 4-hour chart, look at where things have topped out time and time and time again. Just where we are at the 292.50, 292.50 going back to, well, 292.40 or so, yeah. Going back to the 19th. Going back to the Monday and afternoon on the 19th. Going back to Tuesday the 13th. Going back to Thursday the 8th. Very interesting that we've topped there so far this month. That's where we're seeing things topping. That's where we are right now. So what happens on Friday is going to be interesting for us to see if indeed things blow through this mark and move up. They've pushed through the 200-period moving average, the 50-period moving average, and we shall see what we shall see. What happens if things roll over and start heading down? Well, we know that our 2-day's heading down. We know that our weekly's heading down. I think I might seriously think about doing a practice trade going down if that happens. Now, if things blow up and shoot through this mark around the 292.50 mark or so, if they blow up through that and really hammer up, then, of course, bets might be off. But keep your eye on the prize. We may have a ceiling there. And again, 292.50, 293, something along those lines. Keep an eye out. We'll see what Friday has in store for us. This is what keeps it fascinating and interesting. If every single thing went every single way we wanted it to all the time, of course, each and every one of you could be billionaires, or could you? Would the markets even work? Well, they wouldn't work. They can't work if they always go exactly how everybody thinks. But the beautiful thing is we have something called weekly vertical crossovers that work time and time and time again. Aren't they magnificent? Why doesn't everybody pay attention to these? I don't know, but I'm thankful they don't. Let's go to the Qs. Q's up 1.53%. And what do we see when we look on the weekly chart there? We've got a doji, green doji, pushing through the weekly and the 2-day. Price percent oscillator still barely heading down. Of course, it's still quite negative. And the derivative oscillator heading down, gaining downward momentum. 2-day chart pushing through the weekly and just right there at the 2-day, and of course still negative. We see the price percent oscillator still negative, derivative oscillator losing downward momentum. Go to the 4-hour chart. What do we see there? Crossover going up in the morning and then a bit of a pullback in the afternoon. So again, are we seeing a topping on the Qs too? Let's check that out, my friends. Whoa, we're somewhere around about the 189 mark. Are we going to see things on the NASDAQ 100 stop somewhere around the 188.50, 188.75, 189? That's going to be interesting to watch too. Let's see what happens on Friday. Things blow through there, then bets are off. But if that acts as a ceiling, then we know something others might not realize. We will use that to our advantage. Okay, keep that in mind. Just good information to have in the back of your mind. If you're filling out your daily market worksheet, write that down. Important. Underline it. Pay attention to it. Look at things tomorrow. See what you see. Okay, 20-year bonds. What do we see there? Down just a little bit for the day, 0.38%. Still continuing to move up on the weekly chart, reaching higher highs this week. Derivative oscillator heading up. Price percent oscillator still tracking up nicely. Go to the 2-day chart. Price is well above the 2-day, well above the weekly trend line. Derivative oscillator still losing momentum. That's due to the sideways slide for 6 days. And the price percent oscillator still heading up. Look at the 4-hour chart. It crossed over in the morning, down in the afternoon. Now again, if stocks roll over and head down tomorrow, hitting those potential ceilings, then we would guess that bonds would probably head up. Bonds are typically a safe place to put money if stocks aren't doing well. The opposite is true. This downward move might continue. So pay attention, watch, see what there is to see. Bonds have been so good to us since that beautiful weekly vertical crossover going up. What's gold telling us? Gold down for the day, 0.72%. At, again, ending the day at 144.12. And we see that we've had another nice week with gold. Price percent oscillator heading up. Derivative oscillator has been flat for the 2 prior weeks, down just a little bit. We go to the 2-day chart. What do we see there? We see price movement above the weekly and the 2-day. We see that the latest 2-day candle is not a red down candle, solid box, but it's an open box. It means some caution is what we're seeing. But again, price is well above the weekly and the 2-day. The derivative oscillator continues to lose momentum, and that price percent oscillator is heading down but hasn't crossed over, going down. So again, that's on the 2-day chart. So we'll continue to keep an eye on that. And let's go to the 4-hour chart. We see basically a sideways slide in the afternoon on Wednesday. Morning on Wednesday, afternoon on Wednesday, and morning on Thursday, and then a drop on Thursday afternoon. That's where that crossover occurred, going down. And we see the derivative oscillator losing lots of momentum. So that's interesting how the market ended up with gold and that little bit of a plunge, down 0.72% at the end of the day. We'll continue to keep an eye on things and see what is going on with gold. Keep an eye on that 2-day chart with that red spinning top. So again, lots of up movement those prior 2 days to this latest candle. That was Monday and Tuesday, latest candle Wednesday and Thursday. We'll keep an eye on gold. Again, things are poised to continue the up movement. see what stocks do for us in the morning. Stocks start rolling over, going down. Gold may very well pop back up for us. The opposite happens. Gold and bonds may continue to move down some. Folks, that's where we are as we end the day. You hadn't purchased our book. We've got it available. And also, if you want to get this new training, the basic options training that we're giving out for free, we're going to launch it and give it out to all of our subscribers. How do you become a subscriber? You go to chartingwealth.com, sign up for free. That's the way we're going to launch that training, but you do need to go and sign up. Every day you get our daily market review. On Fridays you get our weekly review and forecast. And of course, just like this options training, you get that training to you also. Comes to you in your email. Every day we put it out. We have a special training for subscribers today on killer profits with trend lines. Again, it's part 1 of 2, so I want you to have that also, my friends. We so appreciate you being with us. Follow link in the show notes if you wish to buy our book. If you happen to be overseas, you'll need to email me. For some reason, Square Up won't allow foreign credit cards to clear, but email us cw@chartingwealth.com. We'll send you a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. We also have traders journals available. Sending out a whole bunch of those. Just got a new stack of those in the 12th printing of the book. Autographed copies waiting for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.